On September 24, 2021, the Central Bank of China published a notice on further preventing and disposing of the risk of speculation in cryptocurrency trading on its official website, further clarifying the attributes of cryptocurrency and related cryptocurrency activities, and proposing to strengthen to monitor the risk of speculation in cryptocurrency trading. This is not the first time China has banned crypto. According to Torn Telegraph, China has banned BTC and crypto 19 times since 2009. And at this particular time, the policy is stronger than ever. Many of you may have heard about the China ban news, but news might not be systematic enough. So in this video, we are going to take a look at these big issues surrounding China's latest ban on crypto. The update of the concept description of cryptocurrency. In the newly released document, it is clearly pointed out that cryptocurrencies such as Bitcoin, Ethereum, and USDT are being issued by monetary authorities using cryptography and distributed accounts or similar technologies and existing in digital form, etc. They are not fiat currencies and also cannot be circulated for use in the market. It is the first time in the document to suggest that cryptocurrencies have key features such as the use of cryptography and distributed accounts or similar technologies exist in digital form. The 10 ministries and provincial governments vowed to work together to root out illegal cryptocurrency activity. Among them, the Supreme People's Court, the Supreme People's Procuratorate, the Ministry of Public Security, the General Administration of Market Supervision, and the Foreign Exchange Bureau all appear in such documents for the first time and propose to build a multi-dimensional risk prevention and disposal system for cryptocurrency trading speculation. China seems to be taking every measure to enforce these guidelines. For the first time, the legal risks of participating in cryptocurrency investment and trading activities are presented. The document states that any legal person, incorporated organization, and natural person who invest in cryptocurrency and related derivatives, contrary to public order and morality, the relevant civil legal act is invalid, and the resulting losses might be borne by them. Suspected actions of undermining the financial order or endangering financial securities will be investigated and dealt by relevant departments according to the law. First time proposing to give criminal sanctions. The most attention-grabbing point is that for the first time, the criminal liability for cryptocurrency activity will be pursued. It's also pointed out that if related illegal financial activities constitute a crime, the criminal responsibility will be investigated according to the law. Meanwhile, the crypto economy was rebounding from its last dip after the Great Panic, until the news from China dealt another blow. Just after the notice was issued on the evening of September 24th, crypto markets plunged in response, and major cryptocurrency exchanges were cutting off access to Chinese users. Huobi stopped allowing new users from China to sign up for its service, while Binance blocked account registration using Chinese mobile numbers. Industry media Blockchain Daily made account based on public information, which as of press time, 13 institutions announced to the public that they will withdraw from the mainland Chinese market. The frequent targeted crackdown caused panic, but some experienced traders say they seem to use seeing regulatory signals as a brief burst of noise. A cryptocurrency trader said, "We have missed too many strong or weak regulatory moves since the beginning of the year, and the market has actually been anticipating them for a long time." With the cryptocurrency regulatory posture becoming more and more severe, how to find a balance on the scale of market innovation and financial stability seems to be a major problem in front of the governments. Looking around, countries around the world have different attitudes towards cryptocurrency regulation. There is strong support, there is wait-and-see tolerance, and of course, there is an explicit ban. There are reports in foreign media that crypto expats seem to be more worried about US regulation than Chinese regulation. The United States, as one of the most developed countries in the global financial market and one of the veins of the crypto industry development, has always been ambiguous in its attitude towards cryptocurrencies. But the attitude seems to have shifted recently as the US regulators have intensified their attention to the crypto industry. Federal Reserve Chairman Jerome Powell and the US Treasury Secretary Janet Yellen have also expressed concern about the space. Larry Summers, former US Treasury Secretary and Chief Economist at the World Bank, spoke about cryptocurrency regulation in an interview with Bloomberg, saying that strict regulation would benefit cryptocurrencies. Cryptocurrencies would be better regulated in a sound way, rather than being seen as a heaven for libertarians. On the contrary, the attitude of Asian countries towards cryptocurrency has always belonged to an early start and gradually tightened up. For a long time, the crypto industry has been in a full swing in Japan, which has now formed a more perfect regulatory system for cryptocurrencies, and its open and accommodating attitude towards cryptocurrency is now attracting crypto companies and enthusiasts from all over the world. As a neighboring country, South Korea is well known as cryptocurrency mania, which has gradually given rise to some shallow transactions, and this year, South Korea has accelerated its pace in terms of regulations of cryptocurrencies. In March, South Korean crypto assets companies were required to report their transaction data to the government agencies and comply with anti-money laundering regulations. The same goes for Indonesia, where Trade Minister Muhammad Lutfi said on September 26 that Indonesia will not ban cryptocurrencies completely, but will tighten regulations. And in Latin American markets, where cryptocurrencies are on rise, there is much more rejoicing. Cryptocurrency provide a hedge against inflation, an alternative or complement to traditional banking, and a cheaper way for individuals and businesses across the region to make cross-border payments. El Salvador, which is the first country in the world to adopt Bitcoin as fiat currency. Mexico, where Bitcoin has gained traction as an add-on to traditional financial services, and Cuba's central bank is recognizing and regulating Bitcoin and other cryptocurrencies, as well as setting new rules for how to handle digital assets. The advantages of overcoming inflation, cross-border payments, helping the unbankable, access to loans, etc., have triggered a domino effect in Latin America. Despite the opposition, there is no stopping the boom of crypto in Latin America. What we can see from the above cryptocurrency regulatory attitudes of various countries is that, for the time being, the international community is unable to reach a unified consensus on cryptocurrency regulation. However, it is undeniable that numerous regulatory policies have undoubtedly put forward higher requirements for crypto practitioners, who should pay close attention to industry developments, strictly implement the relevant anti-money laundering system, enhance risk control, and advance warning, as well as avoid touching the relevant legal red lines in business development in order to ensure the healthy and sustainable business development, which is also the way for cryptocurrencies to survive in the future.